Thank you very much and good morning. I'm very pleased to be first speaker for the company section today. Last year after our presentation, which happened to be right at the end of the conference, somebody came to me and said, "Looks like you've got an interesting project, but I think you've got a really difficult task in delivering this." And that set me back a little bit, but he was probably correct. How do I work this thing? Okay, thank you. Normal disclaimers that you'll see throughout the course of the day. Our oil and gas focus is in India, and so I want to take you through some of the changes in India that you may or may not be been aware of. India is the world's third largest petroleum consumer. There's some very heavy statistics here. They are the fastest growing large country by GDP at 7% compared to average world growth at 4%. The government in India has changed enormously over the last 5 to 8 years. They recognise the criticality of energy supply, and under an initiative supported directly by the Prime Minister himself called Make in India, oil and gas is one of the key contributors to the country's future. And as a result, the government is proactively promoting oil and gas opportunities and foreign investment. So much so that in the last couple of weeks, the Petroleum Minister has been promoted to a place in the Cabinet based on his strong performance in the petroleum sector. With that as a background, their domestic production is declining. And that's evidenced particularly by very large growth in LNG imports. They have proven oil reserves of 5 billion barrels and proven gas of 54 TCF without looking at the unconventionals. So inside of this, Oilex operates a multi-TCF gas resource at a project called the Cambay PSC. These are some photos of storage tanks and separators. A little background about the company. We are headquartered here in Perth. We have a project office in Gandhinagar in India, which is the capital city of the state of Gujarat. The company's been operating in India for over 10 years. 9 wells have been drilled, including the first 2 long, horizontal, fully stimulated wells in India. We're actually one of the very few foreign companies that's left in the sector. And one other point of interest, we're dual listed on both ASX and AIM. So what have we been doing over the last 12 months? We have found ourselves in the position of needing to make a number of significant changes. We have revitalised the board almost completely. We have changed completely the senior management in the last 12 to 15 months. We came into the company with a number of legacy issues which had to be resolved and which were putting serious brakes on the company's ability to go forward. So, and we've largely done that. In May 2017, we appointed a new non-exec director based in the UK to reflect that a very large part of our investor base is actually in the UK. We had following successful capital raising based in London. Our focus is on realising value from our Indian projects. We have 2 of them, and I'm going to be talking mostly about the Cambay PSC this morning. Alongside of that, we're actively seeking new projects to broaden our portfolio. So why India? As I said, it's the world's fastest growing economy. It has underexplored prolific basins both on the east and west of the country, both onshore and offshore. The oil and gas demand is increasing enormously. So there are 2 charts at the bottom here. The first is over on the right-hand side. Your left-hand side is oil and gas production, comparing India and Australia. Very interesting plot. I certainly wouldn't have guessed that the 2 curves would overlay so neatly. Both of them are affected by very recent performance in gas, with Australia's going upwards because of LNG and India's going downwards because of a serious decline in domestic production. But if you go to the consumption chart, look at what happens. India's consumption is skyrocketing. So it's not hard to understand why that is. Australia's population is 25 million people. Delhi's population in the metro area is about 23 million people. The total population is now 1.3. population density in India is 150 times more than that in Australia. These are all things that we know about. But the country has been growing enormously. The cityscape changes over the last 5 years are mind-boggling. The growth of high-rises, the growth of new business centres, the growth of pedestrian malls, coffee shops, everything that's associated with it is absolutely astounding, and all that requires energy. They actually import 80% of their oil, and they're doubling over the next few years their LNG imports. They're forecast to be the largest energy market in the world. So the little pie chart at the bottom is ExxonMobil's outlook for energy for the future going forwards to 2040. And look at the way that India has surpassed China, and India is occupying something like 20 or 25% of the world's global energy market. Really astounding figures. The thing that's changed there is the government support over the last 5 years. So moving on to our project. Our main project is Cambay, you can see on the map, located in the state of Gujarat. It's a 40,000 acre PSC. It has discovered oil and gas. It's within the heart of the very rich Cambay Basin. You see on the map the green blobs showing the oil fields and the red showing the gas field discoveries and on production. Pipelines are running through it. The gas pipelines go right through our area, carrying gas north to Delhi, south to Mumbai, and then the cross-link across the country. So we're very well positioned. We have 45% equity in the project, and we're the operator. Our partner is a local Indian company called Gujarat State Petroleum Company. It's a government company. So the project itself is located in a basin that contains proven hydrocarbons in multiple horizons. It's been producing, the first well was drilled in the late 1950s, it's been producing since the 1960s. Our focus now is on low permeability Eocene siltstones, wet gas. This zone has been producing from 5 wells since 1997, albeit at low rates. And as I said before, Oilex was the first company to introduce horizontal drilling and stimulation in an attempt to get the known large gas volumes to flow at commercial rates. The project spectacularly under-delivered. So we've spent the last 9 months actually undertaking new evaluations to understand the reasons for the poor results, to identify whether there's any impediment to going forward, and remedies for future programs. I just note also that there are some lower value potential remains in shallower conventional targets. In 2015, the company engaged Risk to look at run a resource statement for the Cambay PSC, and this is the result. So Risk identified at a 2C level 926 BCF of gas, and at a total contingent and prospective in-place resources of 4.5 trillion cubic feet. So nobody has questioned whether there is gas available in the ground. No story about India is complete without talking about the backdrop of the Indian affairs. We again have had a stalling component in the fact that our joint venture partner has been in financial trouble itself and has had trouble keeping up with cash call payments. Currently they owe us some $5.5 million. They're trying their best, and they've restarted paying cash calls going forward. They recognise their issue, and they are looking to potentially sell their interest in the block. We actually placed a bid on it, and we have a preemptive right over the block, over their 55% interest. One other key component here is that the PSC is an old one. It expires in 2019, and as part of a renewal process, we have to submit a full field development program 2 years ahead. So that means now, this month, September 2017. The field development program for 2 horizons, 2 reservoirs has been completed, has been lodged, and is currently under review by the Director General of Hydrocarbons. Just as a side note, our smaller project called Bandut, we're looking to sell that. So getting down to the really interesting part of this talk, the project itself. The fundamentals of the resource base are confirmed, and the failures are explained, past failures are explained. I want to take you through that. But first, just some additional information. In the block, over 40 wells have intersected the target zone. Many flowed gas and or oil unstimulated on test. 5 wells have been on production, 2 are currently producing on cyclic low rates. The 2 stimulated horizontal wells, first was drilled in 2011, an 800-metre, 8-stage, 16 fracture zones. We know the fractures actually generated. We see that from seismic. We had pressure on the wellhead. We had gas and oil during drilling operations, but the well was actually lost completely and was never able to be tested. A very expensive failure, as it turned out. 3 years later, C77 horizontal was drilled. It's currently producing at low rates and has never reached its commercial targets. So what have we done? We've done a revised geomechanics study from core. You might say, why wasn't this done earlier? It's a very good question. We've done a look-back study on the prior wells to see what happened, and the results that came out of it are very, very positive. The second thing, out of the field development plan, we've identified that we can do things much cheaper than what was done in the past, partly because of lower global prices, but also partly because of clever innovations and efficiencies. We are waiting, before we go into next major expenditure phase, to get the PSC extension, which is a logical, very logical approach. So looking in detail at the studies that were undertaken, we engaged 2 companies, Schlumberger and Baker Hughes. Schlumberger were engaged to do laboratory tests on core, looking at rock strength and looking at fluid matches for drilling and stimulation. Baker Hughes were then tasked with taking the results from Schlumberger, constructing a geomechanical model, looking at the past failures and explaining why they happened, and identifying whether there were remedies which could be used going forward. The results of the studies are very, very positive. We couldn't be more pleased, in fact. So the first thing that they identified, that there's no impediment in the geology to drilling and stimulating, opening up fractures and keeping fractures open and increasing gas production. Baker Hughes developed a corrected geomechanical model. And you can see the 2 curves on the right-hand side, your right-hand side. The top one is the modelled results using the data, the input from an historical well. And you can see the target zone outlined in orange and the modelled frac that was generated from the program that was undertaken. So note that most of the fracture actually escapes vertically upwards and very little of it is in contact with the perforations in the well. Why is this? The old models assumed that the shale roofs were actually stronger in terms of rock strength than the silts, which is the usual case in the US. In our block, it's different. The shales are actually weaker than the silts. So it's very easy for any stimulated zone to escape. The bottom chart shows the optimised model. And what it concludes is that rather than opening up the whole zone, you have to have a very focused, very small perforation zone, critically located within the target zone. And doing that, the frac can be contained within the target zone. In fact, the scale you probably can't read. The top one is 60 metres and the bottom one is 120 metres. So the model shows that we can successfully generate a fracture of 120 metres length and keep it within the reservoir zone. The next conclusion that was offered by Baker Hughes was the proppant that was used in previous exercises was not strong enough to withstand reservoir pressure and was crushed. A very simple solution is to go to readily available ceramic-based proppants. The next very critical thing was to avoid overflushing of proppant into the reservoir. Because the rocks are slightly softer, if you lose the connection between the generated fracture and the wellbore, then the result is that the fractures immediately around the wellbore close up on themselves. And so this is what happened in the previous wells. The proppant was actually pushed only by 20 or 25 barrels too far out into the reservoir. So the answer is to leave proppant in the wellbore, which means additional operations to go in and clean out between stages, but it's something that's necessary. The next conclusion was that it's very critical in terms of the fluids that are used to generate the fractures. So, and in fact, 2 stages are needed. We need a slick water solution to generate the frac followed by a cross-linked gel to place the proppant, and then obviously breakers to clean the proppant out of the well so that gas flow is not impeded. So all of these conclusions can be translated into field operations very, very simply. All of the gear that's available, that's needed for this, is available off the shelf. There is nothing special. There is no impediments in terms of rock characteristics, reservoir pressure, reservoir temperature, volumes of clay, or any of those concerns. We were concerned originally that our rocks might be slightly softer than the world average, but that hasn't turned out to be a problem. So using this information going forward, building value into 2017, 2018, we now have 2 critical pieces of information. One is our field development plan, the second is the Baker Hughes conclusions. And putting those two together, we now have a way of a phased development, initially starting on workovers in existing wells, moving to vertical test wells to test formulas and refine formulas before going into the higher cost horizontal wells. That allows us to capitalise on existing gas production plants and gas delivery systems we're currently delivering into the low pressure pipeline, and it avoids that big and dangerous and brave jump into immediately having to drill high cost horizontal wells. The economics of this are very positive, even with current gas prices. Single well developments are expected to be positive. And so we've moved from a place of a project which had a number of question marks over it to one which has been completely affirmed in terms of going forward. So just wrapping up, Oilex is an oil and gas focused company. We have a large resource, multi-TCF in India, which is accessing a booming Indian market. We have a lot of experience in dealing with the Indian cultural aspects of business. We understand what we need to do to work there. We've spent a lot of time in engagement, building associations with Indian companies and with the Indian governments. We understand that this story has been around for a long time, and so from the investor point of view, there is a reasonable amount of ho-hum. I've heard this story before. You guys have been trying to do this for a long time. But I suggest to you that there is now, that the project is completely reformatted. We now have absolute affirmation that the project can be developed using off-the-shelf, known technologies. We have lower cost base going forward. We have existing infrastructure to leverage off. And really what we're waiting for now is to get confirmation that we have the PSC extension before accelerating an on-the-field program. So I thank you all for your attention and for listening to our story. I invite you to follow us. The best way to follow us is through a UK platform called Vox Markets, which includes podcasts, updates, more regular than just looking at ASX listings. Thank you very much.